Welcome, everyone. Today we're doing a deep dive into, well, a really compelling global showdown. Gold versus the
It's a
dollar.
huge topic right now.
Absolutely. Our mission here is to cut through some of the noise, give you a shortcut to understanding the complex forces reshaping global finance.
Yeah, there's a lot going on.
We're pulling insights from sources like gold versus dollar, the BRICS de-dollarization challenge, also an analysis from CGTN Europe.
Good sources. They cover the key angles.
And look, this isn't just abstract financial theory, right? It's a huge shift. It's got real implications for global power and, yes, for your own pocketbook.
Definitely hits home.
And just to kick us off, get this, gold prices. They've nearly tripled since 2018. Recently passed $3,000 an ounce for the first time.
Wow. Yeah, that's a stunning number.
It really is.
And, what's really fascinating here, driving a lot of that, is the BRICS alliance. Brazil, Russia, India, China, South Africa.
Right, the BRICS nations.
They're making some, well, pretty significant monetary moves. Their whole strategy seems to center on gold and maybe even a new global currency.
Backed by gold, or
Possibly backed by gold, or perhaps a basket of commodities. That's the speculation.
okay.
And this isn't happening in a vacuum. This challenge, it's a direct response to things like rising U.S. debt.
Which is astronomical.
Exactly. And the, let's call it weaponization of the dollar, dollar-based sanctions.
Okay, that makes sense.
So if you connect this to the bigger picture, it's really more than just economics. It feels a bit like geopolitical warfare playing out in the financial arena.
Geopolitical warfare. That's a strong way to put it, but yeah, it kind of feels like that sometimes. Okay, so let's unpack this a bit.
Let's do it.
If we're seeing gold prices surge like that, what exactly are the specific drivers? Why is gold making such a comeback? And how does that tie into the dollar's maybe shifting role?
Well, gold's appeal fundamentally boils down to its intrinsic value, right? It's stable, it's universal, and
Right.
crucially, unlike fiat currency.
Government money, basically.
Exactly. Government-issued money, not backed by something physical. Gold isn't subject to a printing press or, political games in the same way.
Can't just print more gold.
You can't.
Yeah.
And then there's central bank actions. That's huge. Russia and China particularly have been, well, hoarding gold reserves aggressively.
Hoarding.
Yeah, you could call it that. But it's not just them. Central banks globally are buying gold at record levels. They're actively dumping dollars, diversifying away.
Really? Record levels.
Record levels. In 2024 alone, the reports say central banks bought over 1,000 tons of gold. That's the highest in modern history.
1,000 tons.
And honestly, some experts think those figures are probably understated
Yeah.
because not all central bank movements get reported transparently.
Right, okay. That's a massive amount of gold moving around. But hang on, if gold is so valuable, why do we sometimes hear about the U.S. trying to keep its price down? What's that story?
Yeah, that's a really critical piece of this puzzle. Ever since 1971, when the dollar officially went off the gold standard.
Nixon shock.
Right. The United States has, according to these sources, made efforts to suppress gold prices. They've used various tools like selling gold forward or leasing gold from reserves Fort Knox, the Fed, to dealers.
So betting against gold, essentially?
Basically, yeah, selling short on exchanges like COMEX. It was strategic, to keep the dollar dominant.
Okay.
But the analysis suggests the U.S. has sort of reached the end of its rope there. They can't hold the price down anymore. And that's leading to what some are calling a real market developing in gold.
A real market. So the price is finally reflecting maybe true demand.
That seems to be the idea.
And is that just central banks buying, or are individuals like private investors getting involved too?
Great question. It's not just central banks. There's definitely an increased desire among private speculators as well to take physical possession of gold.
Physical bars and coins, not just paper gold.
Exactly. Not just betting on the price via contracts. And this demand for actual physical delivery, it's apparently destabilized the market somewhat. Well, it raises questions about where all the gold is physically.
Yeah.
Can dealers actually deliver on all these demands?
Ah, okay. Logistical issues.
And security issues. The freezing of Venezuela's gold reserves in the Bank of England,
Yeah.
that's often cited as a kind of cautionary tale.
Right. If your gold is stored abroad.
Shows the vulnerability, right?
Yeah.
Your assets could potentially be confiscated if they're warehoused outside your own country's borders.
Wow. Okay, that really adds another dimension to why countries might want their gold physically back home. Seems like gold is having a real renaissance as a safe haven.
It certainly seems that way.
But doesn't this this surge in demand for gold, doesn't it imply a sort of corresponding loss of confidence in the dollar, the current king? What's happening there?
Precisely. That's the other side of the coin. While the dollar has been, king since World War II,
The reserve currency.
the global reserve currency, yes.
So,
But we are definitely seeing cracks appear. Things like sanctions, ongoing inflation, the massive national debt. It's all eroding global trust.
so you're seeing actual evidence of this erosion.
Oh, yeah. De-dollarization is happening. You see countries trading oil in yuan now,
Yeah.
settling bilateral deals in rupees, actively diversifying out of U.S. treasuries.
It really sounds like the world is maybe looking for an off-ramp from the dollar system.
That's a good way to put it, an off-ramp. And a key driver, a big one, is this idea of the weaponization of the dollar,
Weaponization, meaning
meaning the U.S. using its financial system, the dollar's dominance,
Yeah.
to punish countries it sees as, well, hostile or uncooperative.
like the sanctions on Russia.
Exactly. The
Yeah.
freezing of Russia's reserves after the invasion of Ukraine and similar actions by European countries,
Yeah.
that sent a real shockwave through central banks globally.
I can imagine.
It prompted this widespread move towards gold as a precaution because, nobody wants to be next in line for that kind of action.
So it's not just pure economics driving this, it's also perceived political risk tied to holding dollars.
Absolutely. And then you layer on top of that the U.S.'s own economic challenges, right? Huge fiscal deficits, seemingly endless public debt.
Doesn't help confidence.
Not at all. It just compounds the problem. One expert we looked at even bluntly said, the United States is the chief enemy of the U.S. dollar.
Wow.
And we've even seen discussions from previous administrations, like the Trump administration, about things like tariffs on gold imports, trying to tamp down American demand, keep the price from rising.
Trying to fight the market.
Seems like it. And even more alarming, apparently there was talk of forcibly converting foreign central banks' dollar reserves into, like, 100-year permanent dollar holdings.
Seriously, 100 years.
Yeah. That idea, unsurprisingly, is seen by some commentators as a potential final disaster. It just confirms other countries' worst fears about dollar dependency.
I can see why.
And the perception, rightly or wrongly, of the U.S. negotiation style being, you lose, I win.
Mm-hmm.
Well, that just pushes countries harder to find alternatives.
That paints a pretty stark picture of the dollar's current challenges. But
Yeah.
okay, what about actual alternatives? Can other currencies realistically step up, or is gold the only answer? Are there reliable alternatives?
That really is the million-dollar question, isn't it? Or maybe the million-ounce question now.
Maybe.
Look, gold, despite its advantages, it does have quite a lot of price instability, volatility.
Right, it swings quite a bit.
It does, which means unpredictable gains or losses. And because of that volatility, central banks are actually unlikely to hold a predominant share of their reserves purely in gold.
So it's a safe haven, but maybe not the main currency for trade.
Exactly. It's good for reserves, for stability, but maybe not ideal for day-to-day international transactions due to those price swings and, frankly, liquidity issues compared to the dollar.
Okay, so gold isn't a total replacement then. What about other national currencies? China's renminbi, the RMB, we hear a lot about that.
The RMB is definitely becoming a more significant alternative, no doubt about it, but it also has its limitations.
Such as?
Well, China consciously restricts capital account exchange rates, meaning they limit how freely money can flow in and out of China.
Capital controls.
Right. They want to, as one source put it, test the temperature of the waters
Yeah.
before they allow full convertibility. They're worried about economic stability.
Makes sense from their perspective.
It does. So while the RMB is growing in importance, it's not yet a full-fledged alternative in the way the dollar currently functions globally.
Okay. So if gold has its limits and the RMB isn't quite there yet, what does this mean for the bigger picture? How are global reserves likely to be structured going forward?
What's really fascinating and kind of fundamental here is that no other single country is currently running a big enough balance of payments deficit.
Meaning they're not spending enough internationally.
Right. They're not pumping their currency into the world economy for others to hold as reserves, the way the U.S. has done for decades with the dollar.
I see. The U.S. deficit actually supplied the world with dollars.
In a way, yes. It created the pool of dollars held globally. So this suggests a really fundamental shift might be underway. The whole idea of international reserves, our sources indicate, might be moving away from these debt-based currencies.
Like the dollar, which is essentially U.S. debt.
Exactly. Moving away from that towards potentially an asset-based currency, maybe backed by a basket of commodities, or using gold as a key standard of value again.
An asset-based currency system.
Yeah.
Wow, that is a profound potential shift. Okay, let's bring this closer to home. What does this potential financial reordering mean for, your wallet, your
If,
future?
yeah, the personal impact. Well, if gold keeps rising and the dollar weakens significantly, you can certainly see higher inflation at home.
Things costing more.
Right. Imports get more expensive, and potentially, if this shift happens too fast, maybe even a currency crisis, though that's a more extreme scenario.
Oh, okay.
And we're already seeing investors react to this uncertainty, right? People are hedging, they're moving into physical gold, sure, but also cryptocurrencies, other commodities.
Trying to protect their wealth.
Exactly. Some call it de-dollarization. Others frame it more broadly as the dawn of a new financial order.
So, is there a way back for the dollar? Can it recover its footing? What would need to happen to restore that trust?
Well, according to the analyses we looked at, for trust in the dollar to genuinely recover, the U.S. government would need to make some pretty fundamental policy changes.
Like what?
Economically, getting deficits under control. Geopolitically, and this is key, committing not to use the dollar as a mechanism of sanctions. Basically de-weaponizing it,
But is that likely?
honestly. The sources suggest that with the current U.S. administration and political climate, that kind of commitment is largely doubted internationally.
Okay, so where does this leave us, this global tug of war? Where is it heading? What's the outlook for gold itself in all this?
Gold's future looks, well, pretty strong based on this analysis. The price
Right.
rise we're seeing reflects real sustained demand. And crucially, the argument is the U.S. just can't suppress the price anymore.
The dam is broken, so to speak.
Something like that. So there seemed to be not much risk of the price going down significantly from here. The idea is that gold will be built into the restructuring of the world economy,
How so?
particularly as the BRICS countries discussed using it perhaps as a standard of value for settling debts between governments. This is viewed as a deep structural change, one that's not going to be reversed.
Not going to be reversed. That's a bold prediction. Are there any actual price targets floating around? Or is it just too uncertain?
Well, economists are always hesitant to give hard numbers, right?
Mhm.
Especially now, given the state of statistics, market complexity.
Always tricky.
Very. But that said, some experts do believe gold could potentially reach, say, $4,000 an ounce by the end of 2025, if the international situation keeps polarizing and destabilizing.
So, contingent on geopolitics worsening.
Largely, yes. The overall message is clear. Uncertainty is on the rise, driven by various factors, including, as one source mentioned, the potential for an erratic new American president. And this general uncertainty, it benefits the demand for gold.
And no single currency is ready to just take over from the dollar.
Doesn't look like it. It suggests a move towards a more multipolar financial world rather than one dominant currency.
This has really been, a profound deep dive, a lot to think about regarding these financial and geopolitical shifts. It's complex, but clearly very important.
It is indeed very important. And this really raises a critical question for you, our listener, to ponder.
Yeah.
In a world where trust in these traditional reserve currencies seems to be eroding, and physical assets like gold are clearly gaining prominence, what does that truly mean for global financial stability, yes, but also for your own long-term economic outlook? What stands out to you about this really profound reordering of the global financial system?